One of the main benefits of working with proactive accountants who care about you and your business is they will have a pre-year end tax planning meeting with you. As a business owner, it's so key to get all the costs you can go through your business through the business. So as part of our business, we ensure we always have a pre-year end tax planning meeting with our clients. The key thing there is if you do it after the year end, some advice is too late. What you need to be comparing is the cost of you paying for that personally. So you might be paying circa 40% tax to take that money out and to buy it personally, or if you put it through the business, you're not having to pay the tax to take it out, and you've got the corporation tax saving. So the switch is quite significant. So the things we would be saying that you certainly need to be putting through are mobile phones is a great example. You can claim the VAT back if you're VAT registered, and you can claim the full cost. Whilst if you didn't put the mobile phone through, technically you can only claim the percentage of your work-based calls. So there's a lot more work, and you can only recover half the part of the cost and none of the VAT. Another good one is company cars. Company cars, especially hybrids and electric cars, are really tax efficient now. And like I say, you're comparing the cost of paying a car lease personally versus the cost of putting through the company and saving the corporation tax. There are certain benefits like company cars that have are classed as benefit in kind, so you will have to pay, the company will have to pay a smaller tax on it, but it's far less than the taxes you're paying personally to take it out. Other costs that you could consider from a benefit in kind perspective are things like certain insurances. It's always good to review the insurances you put through the business and the insurances you pay personally, because you will find that things like private health insurance, you can pay for it through the business, and yes, there might be some tax from benefit in kind, but it's still far cheaper than having to fork it out of your taxed income essentially. So it's key to get the advice in there during the accounting year. A couple of things to consider from a salary and dividend perspective is it's still tax efficient to have a smaller salary and a higher dividend for the majority of individuals. So especially up to those earning around £102,000. At that point, we'd probably recommend switching to 100% salary. It's still beneficial to have employee family members. So if it means using up their personal allowance, because as their salary goes through the company, you will get the corporation tax saving, and you just need to ensure that they have a role in the business suitable for what you can pay them. The next thing to talk about is expenses and making sure you put all the relevant expenses through your business. So obviously when you're spending money through the company's bank account, you're going to pick them up, but there's some expenses that don't go through the bank account. So examples of that are mileage. So you can claim 45p per mile on the first 10,000 miles. So it's always making sure you get your mileage claims in. And also look at another thing that doesn't typically go through the accounts is the cost of working from home. So you can go through, there's a fairly quick calculation where you can claim £312 a year by claiming the work from home allowance, or there's a slightly more complex calculation where you look at the size of your house, the number of rooms in your house, and which relate to work, and you pro-rata that for the working week to say how much time do I spend working from home, and I can offset that proportion of the household bills. And another one that's always popular is pension contributions. So you can now pay into your pension up to £60,000 a year. So if you're paying tax at 25%, that's 15k off your tax bill straight away. We can help talk you through the options, but we definitely advise working with a financial advisor to really optimise your tax position from this perspective. Another nice little benefit for company directors is you can actually give yourself a £50 gift 6 times a year. So what we advise is giving either gift vouchers or something that's quite simple and you can spend, and like I say, you can spend the full £50, because if you spend £51 or £52 on a gift, then it becomes taxable. The last consideration from a salary dividend perspective is gifting shares to family members. So if it's your spouse, for example, it's tax-free to transfer the shares, and again, as long as they do a service for the business, they can take a dividend to use a dividend allowance, or even dividends to use their basic rate band, where the tax rate is 8.75%. These are just a few of the tips that we deliver in our pre-rent tax planning sessions. So if you want to work with a proactive accountant, drop us a message.